Hello and welcome. I'm Natalie MacDonald. You're watching Dukascopy TV and this is Sydney Direct, where we'll be showcasing Australia's financial markets and bringing you exclusive interviews with market insiders right from Sydney, Australia. Now, first up, I've got Dukascopy TV regular in the flesh. City Index's market maker, Cara Ordway, is with me now. Cara, thank you for letting us into your offices today.
Thank you for having me.
No problem at all. Okay, so we're going to start Aussie dollar, and it's seen a couple of knocks this week, mostly hitting that 8-month low versus the dollar in Tuesday's trading. We've got concerns over China. We've got uncertainty over US Federal Reserve. Would you agree with expectations that we're going to see more downward movement for the Aussie currency?
Yes, certainly. I mean, it's such a different story from that stubborn Australian dollar that we saw only a couple of weeks ago, when it was trading in that very tight range of 92 to 94, when we were very much focused on that low volatility, very much focused on the carry trade and really the risk on sentiment that was filtering through equity markets. But now tables have very much turned. We're seeing downside pressure right down to the 88.30 low that we've actually seen traded today. So very much focused on the Chinese slowdown, as you said, very much focused on the local economy. We're going to have a tighter budget here in Australia, growth forecasts around 2% over the next 12 months, and very much focused on what the RBA has to say as well. So they came out yesterday saying that they're going to be focusing more on macroprudential policies rather than any type of rate hikes going forward in terms of trying to cool that inflation in the housing market. So really very much focused locally. But then, as you said, this big US dollar story as well. There's a lot of strength going through markets at the moment in terms of US dollar, very much focused on the fact that the Fed are likely to end their stimulus in October and then really have this very aggressive policy going into 2015-16 in terms of their rate hikes. So a lot of downward pressure expected, a lot of analysts even calling very low rates. I've even seen someone call down to the 75s in the near term. So a lot of selling going on at the moment. Short positions in the Australian dollar are certainly building. In terms of levels, there is a congestion point around the 88.50 mark where we're trading today, but certainly we're looking down to the 88.20 mark, which was the low from December, and then below that, it's really down to the 86.60 mark, which was the low from January last year. So a lot of downside, a lot of shorts in the market, as I said, and that is really likely to go into 2014 and early 2015 as well.
Now, it was in fact the Kiwi dollar which led this commodity currency charge downwards on that China data. Are we seeing a lot more Kiwi-Aussie correlation at present then?
Yes, certainly. Even today, that's very much been highlighted by the fact that Wheeler's come out saying that these levels that we're seeing in the Kiwi dollar are very unsustainable and unjustified. So trading just above the 80 mark at the moment, that Kiwi dollar saw a big drop after those comments from Wheeler from the RBNZ, down from the 80s, 70s, down to the 80s that we're almost seeing traded now, which is a key psychological support level. So certainly a lot of downside for the Kiwi today, but that also actually filtered through into the Australian dollar. So we saw the Australian dollar come down from those 88.70s down to the 88.30s, which is actually a low on the week. So very much kind of moving in tandem, moving in correlation with the Kiwi dollar at the moment. And both obviously historically have been very much focused on raw materials, focused on the commodity markets, and with that rapid decline that we've seen over the past couple of months, certainly they've been moving in motion downwards. But really, I mean, the cross in terms of Aussie Kiwi has been very volatile in itself. Often a lot of traders will be focusing on the Fonterra, the milk auction results, and also really where the RBNZ are going to go forward in terms of their rate hikes as well. They were the first ones to move. They hiked in June. So going forward, there may be certain differences in terms of what we see from the central banks, and that certainly will create more volatility in terms of that Aussie-Kiwi cross.
So we've touched on it already, but let's talk about that China stimulus story. Earlier this week, we had the Chinese finance minister said no additional stimulus. And now there's news coming out that means that, in fact, China may look to replace their head of the PBOC with someone who is more pro-stimulus. How are the Asian markets taking what is at present quite a confused outlook, really?
Yeah, certainly there are concerns. This guy is very much the face of Chinese global markets. He's been in that job for a very long time. So it does raise concerns in terms of where Chinese economic policy will go going forward. But I do think, though, the replacement that is likely to step into his shoes, Guo Shuqing, is likely to be very much a positive for the market. It's said that he's a bit more pro-stimulus and he's very much focused on being more aggressive in terms of their currency policy. So at the moment, the markets are fairly stable in terms of reaction from this news. CNH crosses have been fairly stable all morning, and really going forward, I guess we'll just have to wait and see as to whether he does make that decision in terms of changing the finance minister. But in terms of stimulus, yeah, it has been very interesting. I think that we very much need to focus on the fact we've got this 7.5% growth level, and this has been in place for some time now, and China are very much focused on reaching that and making that stable over the long term. I think recently we've had some very bad numbers, and which is really caused this kind of call for further stimulus from China. We've had those bad factory output numbers, some bad investment numbers as well. But I think really what we need to focus on is the fact that employment numbers have remained stable. There has been a movement from the manufacturing sector into the service sector, which has been gradual, but it's very important in terms of where their economy goes going forward. But I mean, wage growth in terms of rural areas has also increased. So that's very important in terms of this 7.5% growth level, which does have concerns in terms of repaying debt. But at the moment, I think it's the appropriate policy. I think it's good that they're being cautious, taking a step back, and not really jumping into a huge stimulus program that may unbalance this growth rate that they're already seeing.
From a trade perspective, what would you like to see next?
I think obviously any trader would like to see stimulus pumped into the economy. Certainly, from those numbers that we have seen, as I said, the poor factory output numbers, the manufacturing numbers, if you look into the employment portion, was lower as well. But certainly I think there's a lot of volatility in markets at the moment as it is. We did go through a period where FX markets had very low volatility, and we were just kind of waiting for that catalyst to produce some moves in these markets. But we are seeing that now. We've got dollar yen, as many analysts predict, heading towards the 110 level, even some analysts saying now the 120 level. I've seen some projections for that. We've got cable kind of creating some stability around that 163 level after some big volatile moves last week after the independence referendum, and really the projections for that cross in terms of sterling US dollar are still to the upside. We're still very much focused on what the Bank of England are going to be saying in terms of their rate hikes in 2015, and then the euro as well is still expected to be fairly volatile in recent weeks. A lot of the option prices, a lot of the put prices have increased over the past couple of weeks, as many traders project that we will see further stimulus from the ECB, particularly after some poor PMI numbers this week. So definitely euro to the downside, cable more stable, and yen to the upside. So a lot of moves to contemplate over the next couple of weeks, certainly.
Cara, thank you very much for joining us today. Thank you.
Thank you.
And thank you viewers very much for watching. That's all we've got time for right now, but do stay tuned as we will be bringing you plenty more exclusive interviews from here in Sydney. I'm Natty MacDonald, this is Dukascopy TV, and you've been watching Sydney Direct. Goodbye.